What's going on, everyone? Today, I'm going to do a reaction video to the VA's video release on using the VA home loan. So, I'm going to give you guys my perspective on what they're talking about and give you a little bit more insight into how your benefits work. And if you guys are new to the channel, VA Housing Education, we specialize in educating the veteran community around using the VA home loan. So, please, you like the video, drop a comment below about what we're talking about. See if these things have come up when you were in the process of home buying. So what I'm going to share is going to be the sit rep. Paul is the host of the channel. It's the official VA's YouTube channel. So if you guys also should subscribe to what they're doing. But a lot of times we're going to drop videos on some of the key aspects of housing related videos that they do, just so you guys know all the changes that are happening and how you can leverage that amazing VA home loan. So let's kick it off. And I'm going to pause in between and explain different aspects that they're referring to.
Hello and welcome to another episode of the Sit Rep. Did you know eligible veterans can get a VA home loan at any age? And
And
can
that's important to understand because we do have a lot of older veterans that ask, like, hey, if I'm 99 years old, can I use the VA home loan? And we have a record number of veterans using the VA loan for the first time that are older. So, yeah, there's no time limit. You're 99, you can get a 30-year mortgage. You heard it right, because there's no age discrimination. Now, as young as 18, and we've seen people purchase at 18 or 19. Just kind of really depends on where you're buying and what your income is. So we've just seen that full spectrum. And as a side note, remember, a lot of folks that are older buying condos, you can use your VA loan. I did a whole video on VA condo waivers, so you can maximize and leverage those amazing VA home loan benefits. And the other thing you talked about is you can use the VA loan multiple times, which is true. And not only can you use it multiple times, because the sense that you could only use it one time, like you're saving yourself or saving your loan for, I don't know, to buy your dream home. You don't have to. People will keep reusing the V loan. But not only that, you could have multiple VA home loans. Now there's some math behind it, and at some point you exhaust your entitlement, where you have to do a down payment. But if you own a home with a non-VA loan, but you have enough equity, you could actually refinance that home into a VA loan and use none of your benefits. I know it's a lot. I'm real technical with this stuff because I love it. But I did a whole video on the channel. Just go to the search bar on my homepage for VA housing education and type in multiple VA home loans or multiple VA home loans, and that video will come up so you guys can check that out. It's a huge benefit, and a lot of people lose out on it. Only 13% of veterans have utilized the VA home loan. So that's, there's like 20 million veterans. So we got a lot of veterans to go to help.
reuse the benefit multiple times. That's right. But before I dive into the details, do me a favor and hit that like button
Oh, same thing on my channel.
and subscribe, which helps the Sit Rep in his mission of connecting veterans with the benefits they have earned and deserve. So, unlike conventional and FHA loans, most VA home loans do not require a down payment.
So let's talk about conventional FHA and VA home loans. I'm going to give you guys kind of a quick like a snippet. Conventional loans, the minimum down payment is 3%. That's like the Home Ready, Home Possible, first time home buyer programs. You have FHA loans, 3.5% down payment. But if you're doing, let's say with conventional loan, you're not doing a 20% down payment, then you're going to be charged private mortgage insurance. Private mortgage insurance, PMI for short, is primarily driven by the type of property, where you're buying, and your credit score. So the lower your credit score, PMI gets out of control, out of control expensive. Unless you qualify for a Home Ready, Home Possible, then they allow for the conventional loans for lower credit scores, a little bit higher DTIs, better, and they all with that it comes better interest rates and lower private mortgage insurance. It's just part of the program and how it works. As long as your income is like 80% or lower of the area median income. I know it's real technical again. FHA loans, the nice part is they have a flat PMI requirement, but the downside is, I mean, the monthly insurance that they charge. And they do also charge an upfront mortgage insurance premium that you have to pay to use the loan that gets rolled into the loan, similar like a VA funding fee. So even if you put 3.5% down, they're tagging on another they're tagging more percentage on that to get it closer to that 100%. So be aware of that in that process. But it can be a great product depending on what you're trying to do, especially with multifamilies. Huge fan of it. Condos, very tricky. Unlike a VA loan that you can pretty much get a waiver in any condo, and I did a video on that if you search the channel as well. The other thing with VA loans is that if you don't do a down payment and you don't have a 10% or greater VA disability rating, then you pay the VA funding fee. So if you're buying at 100%, so let's, for example, let's say this is the second time using the VA loan, you're not doing a down payment, and you don't have a VA disability compensation. Okay, so $500,000 property at 3.3%, because that's the fee. It's going to be 16,500. So you actually roll that into the mortgage. So no, you don't pay private mortgage insurance, but in a way you do pay for it on a monthly basis because it's rolled into the mortgage. Okay, so you're paying interest on that. So in a way you do pay some form of it. Now, I'm not an accountant, but I do pay taxes myself, and I have a mortgage. At least you can write off your interest on your property depending up to a certain amount. But again, talk to a CPA, trying to figure that out, because there's benefits to home ownership that exist,
payment, which leaves more money in your pocket.
which is true.
Additionally, these
That's why veterans are able to access the VA loan faster than any demographic that's out there, because of having no money down options.
loans typically save you even more due to competitive interest rates, limited fees charged at closing, and their
All right, now this part, we're talking about competitive interest rates, limited fees charged at closing. That's not necessary. Okay, this was kind of tough in one aspect to explain, because interest rates may seem competitive. Seem is the key word. Veterans often get duped by mortgage companies, and I see this all the time, right? 'Cause I look at these estimates. They'll tell them, "Oh, we're not charging you points." We look at their estimates, they're charging them points. Like, it is wild on how much fees veterans get charged. And if you look online, you see these shiny interest rates that are too good to be true. Guess what? They're too good to be true. And if that's the case, you're going to pay for it somehow. If you're getting a loan estimate, the rate's not locked, that rate's floating, so those fees can change. You need to understand how that works. And I did a whole video on closing costs. So, be aware of that and make sure that you're educating yourself on that process. And I'm also happy to help you. Reach out, schedule a call with me down in the description, and then we can at least walk you through, like, what are the best options, and what are you getting actually makes sense, or it doesn't, especially with like refis. We've seen a lot of those where, man, it just straight up does not make sense because they're charging like 2-3 points to do them. The VA will still allow you to do it because you meet the recoupment period, but they literally like sucked all the money out of your house.
there is no private mortgage insurance requirement, which lowers your monthly mortgage payment and saves you thousands over the life of the loan.
Now, he's correct, because when we do, for the most time, when we look at comparing a 5% down conventional loan versus a V loan with no money down, even the funding fee, typically the payment's going to be lower because the rate's going to be lower, depending on how you structure it. But most of the time, you can definitely get a lower rate than a conventional loan without discount points or origination fees. But again, get with your lender and figure out what you guys can do and what you're eligible for. But typically, we'll still see VA loans with no money down have a lower payment than a conventional loan with a 5% down payment.
Getting started is pretty simple and begins with applying for a certificate of eligibility. To do this, you can apply for your COE on va.gov. You can apply through your lender, or you can apply by mail with use of VA Form 26 1880. Links for all these
Yeah. So the certificate of eligibility is, do you meet the time and service and character of discharge? That is like your Willy Wonka's golden ticket to use the VA home loan, right? You need that document. In fact, a lender can't order an appraisal without them at least ordering that certificate of eligibility. I harp on that because there are veterans that have served, or like veterans that have served, that are not eligible for the VA home loan. I've come across it too many times, and that's why I mention it. And people will reach out and they'll be like, "Hey, I'm about to close on my home. Lender let me know that I can't use the V loan. How did that happen?" Well, what happens is veterans will be like, "Hey, I served in the military. I got a discharge." And then the loan officer won't realize that they don't look at their DD 214, they don't add up the time, and they don't realize that they don't qualify for the home loan. But what they do is they just push paper, right? They just basically say, "Oh, you're a veteran. You have a DD 214. Let me go ahead and submit the request for certificate of eligibility. It will come back in a pending status, which allows the lender to then order the appraisal and move the loan along. And then the VA will come back and ask for supporting documentation. So then they submit the DD 214, and then it gets denied like a week or two later. But we still have people that reach out a week before closing, they're denied. And the crazy part is that unfortunately, I talked with somebody recently that was pre-approved. Okay, pre-approved for a VA home loan or pre-qualified, whatever. We requested, they reached out and said, "David, like, hey, I'm getting spidey senses about this. Can you take a look at this?" I said, "Sure, let's take a look at the income, credit, everything." Everything looked great, phenomenal. And their certificate of eligibility, we also requested it. And they came back that it needed supporting documents. And I'm like, okay, well, this is kind of weird. They've already been pre-approved. The lender would have requested all that. It should be already done. So we reached out to the VA, and you wouldn't believe it. They were denied months ago for the VA loan because they weren't eligible for it, but the lender didn't tell them. Don't let that happen to you. Again, we're always happy to help you review that. But if you're a surviving spouse, you do need to submit the form the first time manually to get your eligibility. A good way to know if you're a surviving spouse and you can use the V loan is if you receive indemnity compensation.
These options can be found in the video description below. Once you've obtained your COE, your next steps will depend on the type of loan and the lender. For most using a VA home loan, the lender is a private bank or mortgage company.
So keep in mind that the VA doesn't do mortgages. A lot of people confuse that, right? You can use whoever you want. You want to reach out to me? Happy to help. You want to reach out to someone else? You can do that. So it's banks, credit unions, basically whoever can originate VA home loans. You just have to ask them like, "Hey, can you originate VA loans?" And I'll tell you two I guess extreme ends. One, if you don't talk to somebody that does VA loans all the time, like they do at least a couple a month, you're not going to have the best experience. I Not from me telling you, but from people calling me and telling me like, "Hey, David, can you jump in and help us?" Or "Our loan got denied," or "Our appraisal got kicked back because of this. Now we can't close." But then we could do escrow holdbacks. We could do different things. It's all about your knowledge base. So the more information you have on a product and how it works, the better someone is going to be able to explain that to you. Now we have the opposite end, lending institutions that primarily focus on the veteran space. I'm going to explain to you how business works. If you are being if you have to spend millions a month on marketing costs and getting all these different agreements and things like that together, you're spending millions a month. It's not like one lending institution has the golden key and having the best um rates or anything like that. It's pretty level across the industry. So what ends up happening is if I have to spend 2 million more a month to market to you, for you then to reach out to me, I have to charge you for that marketing, right? So when you get marketed to and you're like, "Hey, I reached out to them," because that's like the first thing that popped up when I keyword searched or whatever did a search, just note that you are paying for that in some format. These are essential things to understand with that. But that's why you could look around and we talked about earlier, don't get too like the shiny interest rates. I don't know how they're even going to be able to offer that to you. And most of the time, I haven't seen a time actually where they're like, it was just so good to be true that they did it. Because if they would, I call them myself and I ask them, "Hey, can I do this?" And I know what to ask because again, I do this. And they're like, "Oh no, you can't do this. Like, it would be too expensive for you to do or whatever." So like we catch them doing these things.
The lender will request a VA appraisal and review it.
Oh, another important part: the VA appraisal is ordered by the lender through. So lender gets your contract. You sign all the documents, like your intent to proceed. Normally, they're going to collect an appraisal fee because it is a third-party fee they have to pay. VA goes through Webly. It's like a portal they have. They reach out to the VA. VA then will put it in their pool of certified appraisers to basically provide appraisals to the VA. It's a third party. Okay, they are like contracted to do this work. So when that happens, the lender pays the appraiser directly, and the VA just basically like makes that connection. Now, typically, you have they normally accept the appraisal within 24 hours. Normally we see them accept the appraisal every day because there's multiple companies, they're competing for that business. VA does set what the rate's going to be for the appraiser, where in other products like conventional loans, the appraisers are the ones that set what their fees are going to be. So in one sense that's great. The other part is appraisal fees have gone up over the last couple of years because they've had a hard time getting appraisers to work for the VA because their fees were so low. So they weren't making money, and they went after other business that was more, I would say, lucrative for them. And just remember, the VA appraisal, yes, they do their own inspection, like the minimum property requirements, to make sure the property is safe, sound, and sanitary. If you do me a favor, and it's somewhat boring, but go to the VA handbook, go into the minimum property requirements, and see the huge list that the VA is supposed to be looking for. And I'll give myself as an example. When I bought my place, I was like, this is not going to pass the inspection. I was already prepared to do like escrow holdbacks and different aspects. I'm not an attorney, but like there's different things you can do with the V loan to make yourself more competitive in today's market. And we did a whole video on that as well. So when the appraiser came in, they like literally like walked in, looked around, walked out, took some pictures, and they left. And so you think to yourself, how much of an inspection are they really doing? That's why I highly recommend that you guys get a home inspection report, not required by the VA, but it is encouraged by the VA. And I encourage you to do it. And you should really be at that home inspection. And we also did a video about that not too long ago. And then he's going to start off with, along with your credit.
Along with your credit and income information. If they decide to accept your application, then they will work.
Okay. Something important to note here, because a lot of times veterans will be saying that I am eligible for my VA home loan. It is my right to use that VA home loan. And there's two parts to any type of VA home loan. There's going to be eligibility. Do you meet the time and service and character of discharge? And the other part's going to be qualification, right? The income, the credit. The VA technically doesn't have a minimum credit score. This is why he says, depending on your income, your credit and your income information, if they decide to accept your application, I want you to understand the different layers of how a loan works, especially for VA loans. So, VA loan is basically, we go off what's called the VA handbook that has 616 pages. It might be bigger now because they've updated some of sections. But it has everything in there a lender pretty much needs to understand about the VA loan. And with that, there's VA circulars, which are updates to the VA loan that are not into this. Like a good example is that veterans can pay for termite inspections. This $75-ish item would kill veterans from being able to purchase it because sellers had to pay for it. Now they can pay for it all the time. At least once every other day, I'll have someone like, well, doesn't the don't we have to pay the sellers for that inspection? No, because it's been updated. And this goes across the board for the buyer's agents, seller's agents, lenders, same thing. So you really need to be up to date on how this information works.
Work with you to select a title company to close on the house. I've used a
Let me talk about this title company thing that you mentioned. So a title company provides insurance on the property to ensure that when you take ownership of that property is actually going to be yours, and it comes free and clear of any mechanical liens or anything like that. So it protects you and the lender, because if somebody were to come in and say, well, that's actually my house, that's not that person that sold that home, they actually didn't own it, which actually ironically used to happen back in part of the market crash. With there was just a whole bunch of things that happened during that time, but there was a lot of fraud that was happening. I believe now it's a little bit harder or a lot harder to do that, but we do see a lot of title theft. So, and this happens to a lot of older folks just in general. They'll get tricked into signing their title over to somebody, and then that person kicks them out of their own house. I wish that wasn't true, but it happened to a buddy of mine that called me just a couple weeks ago. That happened to their parents, and there's nothing they can do about it because once they sign off on it, that's it. They submit it to the county, clear it up, update the title, and then they're able to do that. So just that's like a side note of this whole thing, and I should probably do a whole video explaining that. But a title company could either be selected by you, the sellers, or the mortgage company. On a purchase transaction, I have not seen a mortgage company use their own title company unless there's maybe no agents involved. But I have never seen that. Typically, either a buyer will use a seller's title company, or they'll pick their own title company. And I encourage you, please ask if there's an exception, or not exception, a discount if you are a veteran. They know you're using the V loan, but if you don't ask if you get a discount, then they won't offer it to you. So just note that.
VA home loan myself, and honestly, the whole process was rather easy. If you'd like to
So that's pretty much where he wraps up. And I'm going to touch base on this last part that he mentioned, that the VA home loan process was easy. I do this every day, and my process was not easy. Okay, there was a lot of things that happened, challenges right from the beginning, like them accepting my offer. And again, I teach this stuff, and no matter how much I explained to the seller's agent, they finally took it because the person that lived in this home was a veteran before. But a lot of times, you have just out the gate, you are trying to figure out, hey, are they going to accept my offer? Then you have agents that look at, depending on who you're pre-approved with, sometimes they'll accept that, sometimes they flat out won't. They'll be like, hey, if they're working with this company, I won't. Is that the correct answer? I don't know. That's not what I do, but this is what I hear. So I'm sharing my personal experience with you guys. Then you have the stigma around the appraisal process. You have stigma around veterans going 100% financing. Well, people will be like, well, they don't have any money. That's why they're using that program. That's not the case. It's a benefit of yours to use that you've earned. So there's a lot of aspects to the VA home loan that I think make it a phenomenal product. I used it myself, and I encourage you to use it. Right? There's so many options that go with using that VA home loan. And it's a shame when people don't use it, or they put it off to the side, or they'll just brush it off like, I used it once, I can't use it anymore, it's okay. So they already come in with that presumption that, oh, I've already used it. Only 13% of veterans use the VA home loan. I think that's wild. I think a lot more can be using it, and with no restriction, it makes it great. I mean, a lot of people have recently called that have retired, and they are looking to downsize. Never used the VA home loan. And they're like, hey, we're retired. We can live anywhere. We want to live by our kids. And we want to sell our current property that's with a VA loan, or keep that one and rent it because they may have a really good deal, or not much, like not much of a mortgage on there. And they could buy another property, use another VA loan, and use the income from the property they currently have to offset the mortgage on the other property. Now they got two assets. They could throw it in a trust and then have that give that to their kids. There's a lot of things that you could do. It's a powerful tool, and you could leverage it to build wealth. There's nothing that says that you can't do that. So I'll leave it at that. If you guys have any questions, drop them down in the comments section. Please hit the like and subscribe button, and I'll catch you guys on the next video.